Good morning, traders. Good morning, traders. Today we want to discuss how to improve Elliott wave analysis with Fibonacci extensions. How to improve Elliott wave analysis with Fibonacci extensions. All right. Recently, I have recorded a video that we titled How to Combine Multiple Time Frames and Elliott Wave Analysis. The financial instrument that we were analyzing was the $3 Incorporation, EPIC DLTR, Delta Lima Tango Romeo. This is a NASDAQ 100 stock, all right, an American stock. Today again, we want to look at how one can improve Elliott wave analysis with Fibonacci extensions. For that purpose, we will focus on the same financial instrument, the $3 Incorporation, and then we're going to show you how to improve your Elliott wave analysis with Fibonacci extensions. Let's get started, all right? So there are few Fibonacci extension levels that the professional Elliott wave gurus are watching. The first one is 161.8%. The second one is the 214%. So the third one is 314%. All right. And the last one is 414% Fibonacci extension level of the first wave. So what usually takes place? Elliott wave analysts, Elliott wave experts, on any time frame, once they have identified the first wave, which is critical for us, all right, the first and the second wave, if you get it right, you can do a lot of things. You can forecast the market, you can use Fibonacci extension, you can map out, okay, where the price is likely to go, and you will be able to start pinpointing, okay, the best breakout point, the best entry point, the best key levels, all right. So very important for us to identify. We don't want to make a mistake when we are identifying the first and the second wave. Critical. Don't get it wrong, because first it will affect your wave forecast, all right, and also you may get lost, which is not good. You want to find your way, all right, and get home. Very important. So after the first and the second wave, we want to apply Fibonacci extensions to the first wave from the beginning, all right, to the end. All right. So once we see the first wave, we apply Fibonacci extension level on any time frame, whether you're on a 1 minute time frame, 3 minute time frame, hourly time frame, daily chart, monthly chart, yearly chart. You want to do that. All right. And before the price even reaches a key Fibonacci extension level. All right. But you have to understand that there are different ways the traders use the Fibonacci extension with the Elliott wave. But my recommendation, which you do not have to follow, you do not have to agree with, is that you watch the level of 161.8%, now 214%, not 214 point something, no, 214% exactly. The 314%. And the 414%. So as you can see on my chart, as I showed you before, we were analyzing the $3 Incorporation, and I have identified this is my first wave. The second wave is horizontal Elliott wave triangle that we call the ABCDE triangle. This is the second wave, the triangle here, and the third wave is from here, all right, all the way up here. All right. If you go to the monthly chart, you understand why I'm putting my cursor here. There's a reason, because the fifth, okay, the third Elliott wave has ended here. Now we are in the fourth wave. That is a flat correction. We want it to come back down, forming the fourth wave. So we are now in the fourth wave, which is a flat correction. 1, 2, 3, 1, 2, 3. Though on the yearly chart, it's not very clear. So is there something that you do not understand here? It means that you have to go quickly and watch that video that we call How to Combine Elliott Wave Analysis and Multiple Time Frame, okay, at 24 Elliott Wave YouTube channel. So as you can see on my chart, once this is my first wave, I apply Fibonacci extension to it, and before the price. So once we see the first wave and the second wave, and we see that the third wave is underway, we apply Fibonacci extension to our first wave. This will help us to improve our area wave analysis. All right. So where is the 161.8%? This is the line here. Okay. Let's color it into red to praise Donald Trump voters, because their color is red. All right. A beautiful election in United States. And now you want to highlight also the 214%, exactly 214. This is my recommendation. All right. And we will color that into green. All right. So that is 214. So the red one is 161.8% Fibonacci extension level. All right. The second one is 214%. So you may say to me, George, I already know this. But, you know, it's a mistake to watch part of our video. So I recommend that you watch the full length for this video so you may understand everything. All right. If you don't have time, don't eat it at all. All right. Don't consume it. Just leave it there. When you have time, come back and watch it. Never watch part of this video. All right. All right. Okay. Now, the brown line here, there's 314%. There are more to this, because what we are doing, we know something we want. So whenever you discover something, whenever you observe something, all right, what is the bottom line? What is the main factor, the governing factor, all right? So suppose you see children, I will teach you a very simple trick. You see children messing around, all right? So how do you control them? So if you start talking to them one by one, all right, you never control the kids. All right, I learned it. So what you need to do is to ask them, who is the leader of the group? And finally, they will find somebody who is the leader of the group. They'll say, this is the person who is the leader of the group. And then you call the leader and speak to the leader. Now, in the financial market, what we are looking for is what? The market stable data. So whenever we see a phenomenon or we observe something, we want to ask that very important question. What is the market stable data governing this principle? All right. We want to highlight a 414% Fibonacci extension level of the first wave. So you have them on your chart. So this is the red line, the green line, the brown line, and the pink line. So before the price even reaches that level. So what I'm going to do now, because the price went to those levels, we're going to switch now to the monthly chart. And you want to observe. All you need to do, once you draw those lines, you are now watching or monitoring, as I always say, the reaction of the price around those key levels. You are looking for high probability trading setup around those key levels, or you are looking for valid breakouts, around those key levels. Now, this will also help you when you are counting your waves. You will see that, especially the corrective wave that are contra trend will be pulling back on the edge of one of those key levels. Will that be helpful? I think it will be helpful. So let's go to the monthly chart. And you may say, George, I already know this. I say to you, watch the full length of this video, because we're going to do something at the end of this video that you have never seen before. All right. So here we are. So we are now on the monthly chart. We want to watch the reaction of the price around the red line. So this is the first red line. See the red line here? I'm moving my line on it. Look at this. Look at the reaction. It breaks above the red line, which is the 161.8% Fibonacci extension level of the first wave. And here it is. Boom. It retests it here, and it starts running away. You see here? Do you see the reaction near the 161.8% Fibonacci extension level? So remember that the bottom line, when you are using the area weight principle, is not to show people that, I know the area weight theory, but is that this can help you, to improve your trading decision. That's the main objective of learning the area weight principle. All right. So here it is. There was a reaction here, which is nice, isn't it? The reason is that a normal third area wave very often will end will stop at 161.8% Fibonacci extension level of the first wave. So professional Elliott wave traders are watching this level. So as the price goes above it, people are trying to sell it down. You remember that if the smart money want to sell, so usually ordinary trader would like to sell at exact level. All right, but what does smart money do? Once they see the resistance like this, that's where a lot of traders get taken out of the trade first. So when they see a key level like this, they want to sell them. They want to test the upper side of the key level. So if it's a resistance, they want to test the upper side. So price goes above it a little bit before they want to sell it. So if there is no demand to buy above the resistance level, then they will sell it down. So you can be a little bit patient and wait for the reaction. Yeah, and then what you need to do, implement a top-down trading method, a multiple time frame trading method to trade it. Whether you are day trading, swing trading, all right, implement a top-down trading method. So this was a trading setup, a bullish trading setup, break a bull, retest. Now we implement a top-down trading method to trade it. All right. So watch the reaction. Now we see what has happened around the red line. You see now? So watch the green line here. Let's zoom into it a bit so we can see it clearly on the chart. Can you see the tail of this candle here? Am I too much? Okay, here it is. You see the tail of this candle? Because if you go to the daily chart, we can see this, but because the time has passed, this is in 2011, so we can't see this now on the daily chart. But if you were here in 2011 and you went to the daily chart, you see that the price went up a bit and then pulled back to retest this green line here. That's why we have the tail of this candle. There is also a small doji here. You see a small doji here that is acknowledging the 214% Fibonacci extension level. So what has happened here? The price went a little bit above, or in fact it went below this level. All right, so people try to sell it after the doji candlestick bar. People try to sell at 214. That's why I said to you, use exactly 214%. People try to sell it, but there is no demand to sell as such, and price return back above and close it. So in this case, after the doji, all right, those who wait, so if you see a doji like this with this kind of candlestick bar with a tail and a closing above the opening price, this is a bullish candlestick bar, bullish candlestick pattern. A doji plus a bullish candlestick with a long tail closing above the opening price. That's a bullish, okay, a candlestick pattern here. And then after that, here it is, it's going up. So there was a reaction. It's a bullish reaction, this candle and this one here, these two candles here. This is a bullish candlestick pattern at 214% Fibonacci extension level of the first wave. Now let's watch the brown line. This is 314% Fibonacci extension level. And here we are, my friend. That's the brown line here. So we usually say to traders that the third Elliott wave, all right, we usually stop at 314%. So professional traders are watching those levels. Look again, a tail. You see the tail? This is a tail, all right, of this. So they try to sell it in the vicinity of 314%. There's a reaction here. But as I told you, the price went back above that level, hit the median line, this blue line here, and then just start coming down. You see? So it turned around. It turned around here. All right? It turned around here. Are you getting it now? But look, as the price was pulling back from here, from the 314% level, look where it went. It tried to come near which level? The 214% level. This is Elliott wave count. You see, there's a wave here. So from the 314%, he pulled back, tried to retest the 214% level, the zone, you see. So with those Fibonacci extension level, we can improve our Elliott wave analysis. I have not finished yet, all right? I have not finished yet, okay? Okay, there are more to this that we're going to discuss. Stay with us. All right? So look at the 414%, which is the next key level, the 414%. You see, 414%. The Fibonacci extension level, the 414%. Let's go back. the 4.4%, that's the pink line here. You can see on the yearly chart again, you see the tail of this candle here. He went above it and retested it, and then before going up near the pink line, look at the brown line on the yearly chart, look at the tail. See, this is what we are talking about. He pulled back to retest the 314% level before going up. Open here, went down before going up. You see the reaction? Look at the 214%. Look again, this, all right, inverted hammer, all right, and the small tail here, again around 214% Fibonacci extension level. Are you getting it now? Look at the 161.8% Fibonacci extension level of the first wave. Again, look at this pullback here, a bit here. Right. If we go back to the monthly chart, the reason why, my friend, I'm recording this video is that if you want to trade Elliott wave without being too arrogant, you want to understand, okay, those things. You want to be a humble Elliott wave trader, all right, not Elliott wave trader that make too much noise, all right. You want to be a very humble Elliott wave trader. And understand what we are discussing here. This will help you on your journey to become, okay, a better Elliott wave trader. So you see the reaction, okay? So from the 314, it tried to pull back near the 214% level. Here it is, as he goes from the 214% level, he breaks above the 314% level and retests it here. Now, you have to understand that in the previous tutorial that we titled How to Combine, okay, multiple time frames and Elliott wave analysis, we know that this move here, 1, 2, 3, 4, 5, okay, this is the fifth manual wave of the real third Elliott wave. So if you don't know what we are talking about, it means that you have to watch that video. So from here, all the way up here, that's the third wave. But that third Elliott wave has been subdivided into 5 manual waves. First manual wave, second manual wave, third manual wave, and fourth manual wave. And the fifth manual wave from here, where my cursor is, all the way up here. And the fifth manual wave of the third wave has been subdivided into 5 manual wave itself. 1, 2, 3, 4, 5. From here to here, that's the fifth manual wave of the third wave itself, which is a complex fifth manual wave of the third wave. Are you confused? All right, it means that you need to go and check out Elliott wave extensions. Okay, extension within an extension. So the third wave has been extended, and the fifth manual wave or the third wave itself has been extended. This is about Elliott wave extensions. Powerful, powerful, my friend. So, but you can see that the second manual wave of our fifth manual wave, all right, second manual wave of our fifth manual wave or the third wave has pulled back to return the 314% level. Will that help your Elliott wave analysis? I think so. Look at this one here. Now look again. This is the third manual wave or the fifth manual wave of the third wave, and this is the fourth manual wave of the fifth manual wave of the third wave. So the fourth manual wave of the fifth wave of the fifth manual wave of the third wave have retested the 414% level here, pull back. There was a tail here. I don't want to remove my line. If you need more clarification about this, check out the previous video, how to combine multiple time frame trading, multiple time frames, and Elliott wave analysis. Retesting the pink line, the 414% Fibonacci extension level. Now that you can see that the fifth manual wave of the third wave has ended here, as we have talked about it before. Now, as the flat correction, because we are now in the fourth wave of the bigger cycle. Are you confused? Don't get confused, my friend. You are Elliott wave trader. Stay focused, okay? As an Elliott wave trader, you don't want a distraction at all right? That's why I recommend to those who are hedge fund traders that they should not allow traders to trade together. Traders should come in the morning, have their discussion, their meeting, all right? But when the real trading begins, all right, traders should be in different sections, separate from each other. No distraction. All right, so very important. So as an Elliott wave trader, you don't want a distraction. So here we have the first wave, the second wave, And from here all the way up here, that's the third wave. We are now in the fourth wave, which is a flat correction. So from this vertical line, we are expecting another fourth wave. Remember that if the market will influence the S&P 500, remember the S&P 500, after the election in the United States, if it start going down more, there may be, few changes to many other financial instruments, including the dollar trade. So this is the fourth wave, which is a flat correction. 1, 2, 3, 1, 2, 3. We are expecting 1, 2, 3, 4, 5 down. Let's go back again to the monthly chart, observing only those Fibonacci extension level. How long have I been talking to you now? For 20 minutes. Don't worry, we're going to wrap it up soon. But I have not finished yet. So as the flat correction itself has begun, which is the fourth wave, you see 1, 2, 3, boom, to the 4.14% level. You see what's going on in this market? You see what's going on? Now, as we are expecting now 1, 2, 3, 4, 5 move down to complete the C part of the flat correction, which level should we watch? Again, those key levels. The 4.14%, the pink one here, all right, and also this one, 3.14%, all right. And if a real correction has begun, all right, we need to monitor, all right, again those key levels. As I'm explaining to you, you see what we have done now? This is what we are talking about. We want to teach traders how to apply Elliott wave, in the real market to make excellent decisions. There were a lot of story, all right, my friend, a lot of discussion, a lot of waste of time, all right. I don't like to waste my time, but some people do. In the market, when people talk just for talking, I don't have time for that. But let's continue with our discussion. So, what I'm saying to you, all right, which I say that I will talk about something else that you do not know before, here it is. So you understand, there's a principle that those who understand Mr. Isaac Newton, as it is above, so it shall be also below. So you hear some people talking about as he was at the beginning, so it shall be at the end. Those kind of things will put the fear of God in you. So it's a bit challenging. When we go a little bit deeper with Elliott wave, it can put a fear in you. So what we have done at the beginning, you see here, we apply the Elliott wave extension to the first wave, yes or no? And we highlight the 161.8%, 214%, the 314%, and the 414%, yes or no? Good. What you need to do, my friend, remember, whenever you see something, a pattern, all right? So, no, let's leave that. I'll leave that one out now. We'll talk about it another time. So, now we apply it to the first wave. What you need to do, whenever you have now, if the multi-wave is completed, so because I'm trying to save time, that's why I'm moving a bit faster now. So the multi-wave is 1, 2, 3, 4, 5, all right? Waves up. Okay, so far what we have done, we apply Fibonacci extension to the first wave, all right? Now, at the end of the fifth wave, what do we expect? We expect the bigger correction to correct what? Not the fifth wave, but the whole multi-wave. So the bigger correction that we call ABC down is correcting the move from here or the trending first completely. Remember the Elliott wave cycle, the trending first and the correction. So in order to use the Elliott wave extension, all right, during the corrective phase, all right, should I say it or should I not say it? I will say it. You want to apply the Fibonacci extension to the fifth wave. But how do we do it? Because normally when we apply the Fibonacci extension, because this is a bullish wave, the extension will be above the high of the fifth wave, yes or no? You see here, when we apply the Fibonacci extension to the first wave, the extensions are above the high of the first wave, yes or no? So if you draw your Fibonacci extension as we do in a normal way, you will see that your extensions will be above the high of the fifth wave, which will not be useful to you at all. Therefore, you need to draw it, your Fibonacci extension, okay, upside down. Do you get it now? Okay, I'll give you one example here. I'm going to remove my, this is what I'm saying to you, that you must watch the full length for this tutorial. So now you see, so here we are. So normally, you see, from here to here, that's the fifth manual wave of the third wave. Yes or no? All right, the fifth manual wave of the third wave. There are more to this. It's becoming too complicated now. Should I? Okay, I'm thinking like recording another video to explain this to you guys. So now, suppose, my friend, because this is not the real fifth wave, because we are now in the fourth wave. Yes or no? This is not the, from here to here, it's not the real fifth wave. It's the fifth manual wave of the third wave. But I'm just using it to give you one example. Normally, when we are drawing the Fibonacci extension, if you want to apply Fibonacci extension to suppose this is the fifth wave, we'll draw it like this, from the top down, and you will see that the extension are above the high of this one here. All right, which is not useful for us, because what we are trying to do by applying the Fibonacci extension to the fifth wave upside down, repeat, upside down, we want to do it the other way around. So you turn it like this, upside down, and you put it like this. So you may have, now you can see that the extension lines, key level that were above are now below, are below the low of this move up. Okay, so that's how you want to draw it at the end of the fifth wave. And once again, you want to draw the key levels, the 161.8% upside down, all right, the 214%, the 314, and the 414% Fibonacci extension upside down of the fifth wave. This will also help you again when a correction is starting at the end of the real fifth wave, so you may map out the key levels, the levels where you can make excellent trading decisions. So what I'm going to do now, because we are not yet in the fifth wave, because this is a fourth wave, 1, 2, 3, 1, 2, 3. We expected 1, 2, 3, 4, 5 down. This is a fourth wave before we will have the fifth wave. So if the fifth wave is completed, we can apply Fibonacci extension upside down. Repeat, upside down. So the reason why I'm repeating myself, because it's so important. Sometimes they may say, oh, you repeat yourself so much. Yes, I do, for okay, valid reasons. All right. So upside down, we'll apply the Fibonacci extension upside down to that fifth wave, okay? And we will want to highlight, okay, 161.8%, 214%, 314%, and 414% Fibonacci extension level of the fifth wave. This will help us also to trade the corrective phase. What I will do, I will be recording another video when I will show traders how to use, okay, the Fibonacci extension to improve, okay, your corrective phase trading. That will be another video, so you may understand clearly what I'm trying to explain to you here. So you can see that at the beginning we applied the Fibonacci extension to the first wave, and all we did is to hide a 161.8%, 214%, 314%, and 414% Fibonacci extension level of the first wave. Those key levels will help us in our area wave analysis, in our area wave count. As you can see here, you see how the wave are retest, breakable retest, and we see the flat correction retest in the 414% level, and will help us improve our area wave analysis. At the end of the fifth wave, we can apply now the Fibonacci extension to the fifth wave, but upside down. And we want to highlight again the same Fibonacci extension level in order to trade, okay, the corrective phase, okay, of the area wave cycle. Now this is the end of this tutorial, and we were talking about how to improve area wave analysis with Fibonacci extension. If you have any question or suggestion, comment, okay, put in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about how to improve Elliott wave analysis with Fibonacci extension. Happy trading to you all and speak to you soon.